Hello friends, in our previous lecture we have discussed and started our chapter number 2. Now we were discussing about the formats of each and every account, and in that we have discussed 5 accounts in our previous lecture, that is trading account, profit and loss account, profit and loss appropriation account, partners capital account, partners current account. And we have discussed in detail that what all the transactions are included in these accounts, how to remember about that account, and now we are going to see the format for a balance sheet. The last that is a statement, it is not an account. Now we are going to see the format of balance sheet in detail. Okay, we have it on page number 40. On page number 40 we have a format of balance sheet. Now we are seeing the specimen of balance sheet. Balance sheet as a dash of dash, as we know how to write the name, but the heading is very compulsory. Now on the capital liability side, which is credit side, fixed capital accounts, that is A and B. See, remember friends, one more thing, in normal each account we have debit and credit, but for the balance sheet we have no debit credit, instead we have credit and debit. Okay, please keep it in mind. Fixed capital accounts A and B. Why fixed capital accounts? Because here we are supposing that we have both accounts, that is capital and current account, we both have. Now whenever we are closing the capital account, as I told, it will have always the credit balance. Okay, so credit balances are shown on the liability side, A and B. Then current account, it is dependable. See, current accounts can be seen on liability side and at the end of asset side. So if we have credit balance for current account, we will show it on the liability side, and if we will have debit balance, then we will show in the asset side. Okay, then after that, in the between, in the mid of the balance sheet liability side, we have all the types of reserves. That is the second effect of the reserves, which is coming from P&L appropriation account. P&L appropriation account, if you want to transfer some amount to the reserve, then first debit side of P&L account, that is debit effect, and other credit side means liability side of the balance sheet. Okay friends, yes, capital reserve, other reserve. Then we have 2 types of liabilities, but we don't need to differentiate. This is just for our explanation that what is non-current and current, but in practice we are not using that thing. The liability means liability side, you can write it anywhere, there is not a problem. But if we want to remember this thing from standard 11, then non-current liabilities are the liabilities which are for more than 1 year, and current liabilities are the liabilities which are for less than 1 year. Okay friends, so which are they? Loan from bank, loan from financial institutions, loan from friends, partners, loan. Then current liabilities, bank overdraft, sundry creditors, bills payable, outstanding expense, incomes in advance, tax provision, provident fund, interest outstanding on partners loan. Then on asset side, again the assets are differentiated according to the headings, but actually it is not required. First we are having non-current assets which are for more than 1 year, that are fixed assets, and in that tangible. We have learned this thing in standard 11 itself. Non-current assets, and in that we have fixed assets, and in fixed assets we have tangible and intangible. Tangible means which you can touch, feel and see. Intangible which you cannot touch, feel and see. Detail we have already seen in standard 11, so just we are seeing the format. Land, building, leasehold properties, vehicles, machines, furniture, fittings. Intangible, patent, trademark, copyright, goodwill, all these things I have already explained friends in 11th standard. Now this is not for new for you. Then investments are also shown on the asset side of the balance sheet. Investment in government securities, investment in provident fund. See friends, provident fund is shown on liability side. Investment on provident fund is shown on the asset side. Also, contribution to provident fund is shown on debit side of P&L account. And one more thing, that is interest received on provident fund investments is added to the provident fund. Again I will repeat for each and every one. Provident fund simply is shown on liability side. Investment in provident fund is shown on the asset side. Then contribution to provident fund is shown on P&L account debit side. And last, interest received on provident fund investments is added to the provident fund, not added to the investment. Other non-current assets are deferred revenue expenditure, that is fictitious assets only. Current assets have closing stock, sundry debtors, cash balance, bank balance, incomes due. Then loans lent means we have given the loan, bills receivable, prepaid expense, and finally current accounts of debit balance. Now, friends, we have in total 33 adjustments. These 33 adjustments are given. Now we are seeing in detail about the effects of each and every adjustment. Plus, you all need to write that thing in your note. The two effects of adjustments. Why I am telling, the reason is simple. The adjustments which are given have some mistakes in it. The adjustments which are given in our textbook have mistake in it. So to avoid that mistake, what we will do, we will write. And what I have done is I have divided this adjustment into 9 types. Total there are 33 adjustments. There are extra adjustments which I have already made in the sum, considering the sum, and I have divided these adjustments into 9 types. So we are going to see each and every type, but not according to the number of book, according to the number which I have given. Okay, I have prepared a note of it, so it will be very easy for me and for you also to learn these types of adjustments. Okay, friends. Okay, friends, let us write. Learning adjustments group wise. Learning adjustments group wise. In that, group 1. This will actually take time, but if you are learning this thing in such a way, then I am guaranteeing you, you will never forget these adjustments. Okay, friends, so let it take time. We have time. Okay, so let it take time. We will do slowly. Now group 1, the heading for group 1 is okay. The first group of adjustments are stock related adjustments. What related? Stock related adjustments. And each and every group will have some hints to remember. Now see, friends, I have divided 33 adjustments plus my adjustments according to the group wise. I am giving the hint also to remember the adjustments. This is for you people only, so I may request each and everyone that don't just write the things that sir is telling and you are writing. That is not the concept, my friends. This is for you people. This hard work is only for you itself, and the reason is simple. I am not doing any favor for you, but the reason is very simple, that this sum carries 11 marks and the sums are not fixed. They can ask the sum in any way. So our goal for a normal average student is that from 11 marks, a student must get minimum 7 marks. My first target will be of 7 marks itself, not more than that. The reason is simple, that sums which are given in the book are very good. I appreciate totally that sums. But the problem is that the papers will not be directly from the question. They are changing the question. As you know, I was changing the question in standard 11, and this is for your board itself. The papers will be somewhat tricky. Questions and will not be directly from your textbook. So this is the reason to do all these things. So it is a request, humble request to each and everyone. So don't just write these things. Understand and then write. Let it take time. No problem. Okay? Yes. Now begin. One effect of any type of stock will be always given in asset side of balance sheet. Okay friends, this is the thing. We know that there are two effects of adjustments. Let us first remember one hint only, one effect only. What I am meaning to tell is that one effect of any type of stock. We are having two types of stock related adjustments. So stock can be of any type. Its one effect will be shown always on the asset side of balance sheet. About the second effect you just need to remember. But suppose if you are not remembering that second entry or second effect, no problem. You have given one effect, so you will get marks accordingly. Okay, answers, there is not a problem if your answer does not tell you. Okay, let you write adjustment, first effect, second effect. Now first we are having adjustment for closing stock, which we already had in standard levels. Closing stock's first effect is trading account credit side. TR means trading account. Trading account credit side, and second asset side of balance sheet. Now friends, as this is shown on credit side, so it is credit effect, and as it is shown on asset side of balance sheet, so it is debit effect. So one credit and one debit, or you can remember one debit or one credit effect. So the first adjustment which is to be remembered regarding stock is that closing stock, first effect is trading account credit side and second is the asset side of balance sheet. And when only closing stock is given in trial balance excluding the adjustment, only it is given in trial balance, directly we are showing it on asset side because it is given as debit balance. So debit balance on debit side. You are remembering these things from standard 11 also. The next type of stock is stationary stock. Stationary stock. Now first effect, deduct from stationary expense on debit side of P&L account. Now this is credit effect. Why credit effect? Because I have said in standard 11, on debit side if you are simply writing it is debit effect. On debit side if you are adding, then that is also debit effect, but on debit side if you are subtracting, then instead of debit, that is credit effect. So deduct from stationary expense from debit side of P&L account. If you are deducting from debit side, it is credit effect. Second effect will be on asset side of balance sheet. Again it is debit effect. But the difference is that here we are subtracting from debit side, so it is credit effect, and this is debit effect. So the hint is good. The hint is useful here. Why useful? Because one effect will be on asset side of balance sheet itself. So that's all for group 1. Group 1 is over. You may write this thing in such a way. If you are remembering these adjustments in such a way, then I guarantee you will never remember. You will never forget it. So in such a way, the first type is over. You may see group 1, stock related adjustments. What hint should be remembered if you want to pass in exam, that any type of stock will be shown on the asset side of balance sheet. Now second effect is to be remembered according to the adjustment: closing stock, trading account credit side, and stationary stock deduct from stationary expense on the debit side of P&L account. Okay, now we are going for group 2. Group 2 is about adjustment. ADJ means adjustment, you all know, related to expense and incomes. The group 2 is about adjustment relating to expenses and income. For that, what thing we have? Outstanding OS, which is known as OS, and receivable, which is known as REC. Are always added, and advance or prepaid are always subtracted. This is not new for us. This is also seen in standard 11 also. Outstanding expense, receivable income, prepaid expense. So what I said in standard 11, we can remember it in our Gujarati language also. Outstanding and receivable means baki. Baki is always plus. Outstanding and receivable is always baki, and baki is always plus. While advance or prepaid are always subtracted. You can remember in such a way also. Now we are writing. Okay, so it is over. Now we are writing the adjustments. Outstanding expense, as it is outstanding. Expenses are shown on debit side, so it will come on debit side, but it is outstanding, so it will be added. P&L account, debit side plus. As we are adding on debit side, it is debit effect. If we are adding on debit side, then it is debit effect. The second effect will be credit. Credit means liability side of balance sheet. Balance sheet, liability side. So it is credit. After that, receivable income. See, again incomes are on credit side and it is receivable, so it will be added. So P&L account, credit side plus, as it is added on credit side, it is credit effect. So next effect will be debit. Debit means asset side. Balance sheet, asset side. See, we have seen two adjustments, which are the outstanding and receivable. Now what you need to remember is that outstanding and receivable are always plus. Also you know expenses are on debit side, so debit side plus means debit. Incomes are on credit side. These are the simple basic things you should know. Incomes are on credit side, and as it is receivable, so plus. So credit side plus means credit effect. If one is credit, other is debit. Debit means asset side, credit means liability side. Okay, next. Advance or prepaid expense. Now, as the expenses are on debit side, but as it is advance or prepaid, so it will be subtracted. So P&L account, debit side minus. Now, if we are subtracting on debit side, so it is credit effect. If one is credit, then other is debit. Debit means asset side. So next effect, balance sheet, asset side. See friends, only simple logic is required, otherwise this is nothing. Expense is on debit side, as it is advance or prepaid, so minus. So debit side minus means credit. If it is credit, other is debit. Debit means asset. These are very simple things if you consider. Okay, otherwise nothing can happen. And last, advance or prepaid income. Friends, as it is advance or prepaid, so minus. Incomes are on which side? Credit side. So P&L account, credit side minus. Credit side minus means debit effect is one is debit, other is credit. Credit means balance sheet liability side. So balance sheet liability side. That's all. I will make the lines. So friends, once more, adjustments relating to expenses and income. Most of the adjustments are of this type only, and most of you don't know these things only. This thing is very simple to remember if you know it think-wise, but the thing is that we people don't concentrate on these things. Problem is with us only. We are not concentrating on this thing. Thing is very simple. Please listen again. Friends, the hint is about outstanding and receivable are always plus, are always added. Prepaid or advance are always subtracted. Now, a simple thing. Outstanding means plus. As it is expense is debit side. So debit side plus. If one is debit side plus means debit effect. If one is debit, other is credit means liability side. First you remember about the P&L account only. Don't remember about the balance sheet. Many people are always thinking about the balance sheet only because in the book it is given. You are only by hearting the expense or adjustments. This is not proper. Again, receivable means also plus. Incomes are on credit side. So P&L credit side plus. Credit side plus means credit effect. If one is credit, other is debit. Debit means assets. Advance or prepaid expense. Advance or prepaid means minus. Expense means debit side. Debit side minus means credit effect. Is one is credit, other is debit. Debit means assets. Advance or prepaid income. Advance or prepaid means minus. Income means credit. Credit side minus. Credit side minus, so debit. If one is debit, other is credit. Credit means liability side. Only these simple things, if you remember, then it is very good for you. Okay. Now for today is last type, that is group 3. Let me take small topics so that if you want, you can remember it very easily. Now we are having group 3, and that will be okay for today. Okay friends, group 3. Okay, group 3 is about very easy. Bad debts, bad debts reserve, and discount reserve on debtors. Friends, this is, we are talking about debtors. So the hint is simple. One effect will be given in debtors itself. Friends, very easy to remember. We are talking about all the reserves and bad debts on debtors. So one effect will be always on debtors. But first we should write the hint, which is important here. Hint. Three of adjustments have same. These three adjustments have same effect itself, no change in the effect. Now, for that we need format, for better reserve and discount reserve. All these things are seen in standard 11 also, but this is just a repetition. The persons who have concentrated properly in standard 11 will not face any problem to learn this adjustment, and the person who have not concentrated will face some problems in standard 12. No problem, but you can learn now also. In standard 11 it does not have anything. But these hints have came in my mind and I have prepared it. Okay? Yes, format for bad debt reserve and discount reserve. Okay, first we are talking about for bad debt reserve, where it will be shown on debit side of P&L account. Okay, how we will write that format? BD means bad debts. TB means trial balance, bad debts trial balance, plus bad debts ADJ means adjustment, plus BDR means bad debt reserve adjustment, minus BER means bad debt reserve trial balance. That's all. This is for bad debt reserve. And again, we are having for discount reserve. It will be also on debit side. Discount allowed trial balance plus discount reserve adjustment minus discount reserve trial balance. This is for discount reserve. Now also common effect. As I said, all these are same effect, common effect for all. Debit side of P&L account format and balance sheet subtract from debtors on asset side. Okay friends, all of you may be knowing this thing only, this is nothing new for us, but how we will remember this thing is that first we are going about bad debts and bad debt reserve. That same thing will be applied here. How to remember? First both are bad debts, second both are bad debt reserve. First is trial balance, last is trial balance between both adjustments. In this way you will remember. Bad debts trial balance, bad debts adjustment, bad debt reserve adjustment, and last one minus bad debt reserve trial balance. Now this same format, only cut second thing will be applied here. Discount allowed trial balance, bad debts trial balance. Discount allowed in adjustments, only the second thing will not be present. Discount allowed adjustment is only not given, other both reserve are same. Plus bad debt reserve adjustment plus discount reserve adjustment minus bad debt reserve trial balance minus discount reserve trial balance. So only second thing will be deleted here. Discount allowed in adjustment we don't have, only discount allowed in trial balance only we have. So this is for bad debt reserve, this is for discount reserve, and where effect will be shown, debit side of P&L account in the format and asset side balance sheet subtract from debtors. So these are the things for bad debt reserve and discount reserve. It is very easy to remember friends, it is just a repetition of standard 11. So you may see it, and that's all for today. 3 groups have been completed today. Tomorrow we will go for the 4th group. Okay friends, that's all for the day. Thank you so much.